Happy Friday, everybody. Welcome to Trade Live with IG. It's bank holiday weekend. We are hours away from... What's your plans, Mini Cooper?
I'm going to see my dad. We were going to have a barbecue,
right?
However, it looks like it's like 13, 14 degrees outside, unfortunately. So it doesn't look like we're doing that anymore.
Mate, burst the bubble.
Well, what about you?
We're all ready for a big hype up into the weekend. You tell me it's going to be 14 degrees.
Not my fault, is it?
I don't. I heard you were sunbathing out the back of your nan's house.
No, I went there for Sunday, Monday, Tuesday, Wednesday. I was gonna, but I couldn't.
Right, happy days.
It just wasn't sunny enough. So I just sat in the conservatory instead because it's warmer, but then I don't get like a light tan on my legs as such or anything like that. Because like I said before, I'm quite careful about my face because I don't want to get wrinkles.
Yeah, mate, when you've got a face like that, you've got to be careful. Can't get any worse. So what do we got coming up on today's show? We have myself and Mini Cooper through with you until 8:35 this morning. Then Ange has got her investing experience series, and Johan Clement is coming in from external. So that's going to be very exciting there. And then she follows that up. She's not messing around today. She's got trading experiences then with Simon Popple. Before that, we're doing an all sessions opening bell with Elliot Harris. Elliot and I back together, the dream team for the first time in a good few weeks. And then we've got number of the week and the week ahead with Beachy. Beachy is in-house.
Lovely.
Right, before we go on, tell us, how's the Spanish lessons going?
What?
You doing Spanish lessons?
Who said this?
Have my sources?
That's Sam Peach. Sam Peach is doing Spanish lessons. So he listens to audio when cycling to work every morning.
Right. And you're not going to have a go yourself?
I don't know where this has come from. It must be Ronnie.
Ronnie, let us know on the chat. Buenos dias to everybody.
What does that mean?
Buenos dias. Okay, right. We got a bit of a way to go. Maturin, tell us what Buenos dias means, please. Of course, he's over there in Valencia, or just outside Valencia. Now, I had a wonderful evening last night up the top of Canary Wharf, and a huge thank you going out to Mango and his partner, who not only came along to support, but also brought us along gifts. And brought us all gifts.
What did you get?
Absolute gentlemen. It's an incredible mask. And all these gifts have been 3D printed because he does all his own 3D printing. And it's brilliant. Ange's got this beautiful cat, and then hearts for all the that lot in there, the gallery and that lot. Here we go. Ronnie's saying, get Luke a couple of beveraginos, and he's off for a glass of vino.
No, the truth
glass of vino with the lads.
The truth is, I was drunk. This was like a year or so ago. It was like a hub, not a hub drinks, but we sometimes like get together and have like company drinks. I think we were like Beer Keller in Bermondsey. And I was talking a bit there. And now, ever since then, because he's English and I can only actually speak fluently in one language,
it
takes the mick. That's what it is. But Ronnie's obviously fluent in 3 languages: English, Kurdish, and Swedish.
Rubbish.
And rubbish. 4.
But he does have, he's had a couple of dates on the old dating apps.
Oh, has he now?
Yeah. What about yourself?
Nothing.
Nothing. Mate, it's bank holiday weekend.
Looks.
Come on, I bet
haven't got his looks.
No, that's true. Yeah,
or his chat.
He's trimmed up. Well, you've got his chat. Same level. Right, let's go on to today's show. Some overnight action. What's been happening? Right, let's kick off this morning with the economic calendar that producer Phil has got ready for us so well. That Japanese inflation rate, 3.6%. That's the highest we've seen in a long time. Japanese inflation isn't meant to be 3.5%, right? That's meant to be 1.5. And then retail sales in the UK, we had a nice print there at 7 a.m. this morning. So that, yeah, year on year, 5%. And then we've got, new home sales. It's been such a quiet week in the US for economic figures, hasn't it?
It has, yeah. But then I think it was Wednesday night where there was a little bit of volatility because there was the bond market auction. I think it was for the 20-year bonds.
Right, yeah.
And of course, there's a lot of worry about that because now everyone's basically saying, look, they're going to want higher yields for this US debt. As you saw yields rise, and therefore when yields rise, of course, bond prices fall.
That's right. We've got a nice story on that. It is the headlines this morning. Investors shift away from US bond market on fears over Trump's policies because, of course, it passed. The bill, the big, beautiful bill. Now, somebody highlighted it to me this morning. That big, beautiful bill was, of course, 3 Bs. What you don't want is a credit rating of 3 Bs. So they've not quite thought that one through yet. So, yeah, we've got BBB.
Still investment grade, though, right?
Yeah.
But,
not great investment grade, is it?
No, true.
Your chat's a bit triple B, to be honest.
Oh. I was going to make a cringy joke, but I thought I better not.
So there we go. We've got, investors shifting away from US bond markets. The Times has gone one worse this morning. The Times has gone, global bonds sell-off accelerates after the vote for Trump tax cuts. It's a real, it's a face-off at the moment now. So we've had Kevin Hassett saying that they will outgrow the debt worries. Right, growth will come back, and they'll outgrow it. Questionable.
Because I also saw how Diamond was saying how there's quite a high risk of stagflation now. So high inflation, high unemployment in the US, which is a real worry. That's really not what you want.
It does. The only thing helping that, of course, is the oil price. We had the oil price lower again yesterday, but to be fair to them, they've done a good job of getting that passed because it passed by one vote, 215 to 214. Mike Johnson managed to get it through. It now goes to the Senate. The Senate have to vote it through as well. But yeah, Poppy rightly saying on the chat there, sounds a bit like Liz Truss to me. What is the difference? Apart from it being backed by the US, what is the difference in the rhetoric that is coming out of it that will add over $3 trillion to the deficit? Send them up to 134% of debt to GDP. Might not just be one downgrade. Moody's being last to the party. Who's going to be first to the party of downgrading them again? Right. But, we just, I did want to touch on those retail sales this morning because I almost didn't believe it. It was so high. Look at that, 5% for the UK. Retail sales ex-fuel up 5.3%.
Very nice.
They're not messing around, are they? Have you been shopping this month?
Have I been shopping this month? No, it's my birthday coming up in July, so I'd normally wait till then.
To buy yourself?
Yeah, like I wait. Cause now it's not like when I was younger, where like for my birthday, like I get
Santa Claus would come.
Yeah, I get like toys or like games or like PlayStation or something like that. So now I just spend it on clothes or like use some money towards a holiday, which I get.
Nice. And where is the next holiday destination?
It's like a week and a half, Portugal, Lisbon and Vilamora.
You're off to Lisbon.
Yeah.
Beautiful.
Well, I'm a bit upset, so I won't be on here for quite a long time because I'm not on it next week because I've got many late shifts coming up and the bank holiday. And then I'm away in Portugal.
Sorry, I didn't clear this. Who's putting you on late shifts?
You have to ask Pete. He's my manager.
Well, I can't because Pete's on a bloody EasyJet flight across to holiday himself. Sending me pictures this morning that he's the wife's got the 2 kids next to her, and Pete's obviously across the aisle, got the seat to himself. Probably starting on the beers by approximately now, somewhere over the channel. So yeah, Pete Ward, have a fantastic holiday. Although last time you went on holiday, I must say, It was April the 3rd. And of course, we know what happened on April the 3rd this year. So he does tend to be away when
August. He was off on August the 5th, which was a yen carry trade day.
Was he?
He was off then. Yeah, it's just like leave us to do all the work.
I might have a Pete Ward holiday put just to have something out there because you know we've got all the makings of problems at the moment.
Yeah.
Right. We've got the bond market is give us a real warning. Right. It's not messing around. 505 I think we are this morning. No, 502 now on the 30-year. 502 in the 30-year. But it's starting to happen around the world. And next week you've got issuance from the UK, from Australia, I think, and from the US as well. So, you know, bond auctions, this isn't going away, this story.
It's interesting because if this does, you know, potentially cause a recession, it's not just the US who's going to be affected. It's going to be Europe, UK, Asia as well if the US goes into a recession.
Yeah.
So it's a bit of a worry.
So yeah, just be careful. If you've got a lot of long exposure, I was speaking to a client here yesterday, and he's got a lot of long positions, right? And he was asking about potentially a way to structure some protection.
Yeah.
But sometimes it is just better to sell things and take the risk down.
Use exposure.
Or just straight futures hedge and be short futures.
Yeah.
But going into a weekend like this, just blind long, you know, I would be nervous.
Yeah, particularly it's the bank holiday both here and in the US.
Yeah.
Yeah.
It's interesting. Now, there's not often you get the bank holidays both. Do you know what it is in the US?
I don't. I only know that because I always check because clients usually ask. So I'm like prepped in advance.
We've got the old almanac out here, so that'll tell us it is Memorial Day.
Memorial Day. Okay.
There we go. And yeah, so just be careful this weekend. Don't ruin your bank holiday weekend, you know, worrying about a load of long exposure, as I did back on April the 2nd.
You would be worried about the weather. Right.
Only be worried about you getting your top off in 14 degrees. So, right, let's go on to our stock of the week. It has to be the one, the only, Smarter Web Company. What happened yesterday afternoon? So when we were talking about Smarter Web and explaining the situation, it was at 31.5p. It closed last night at 49. Over a 50% move.
Impressive.
53% move.
Impressive.
And Andrew celebrated last night by coming out with a fundraise, capital raise, through raising, oh my goodness, I hadn't looked at this number, 6.8 million.
Impressive. Very impressive. Because
he's raised 6.8. Wow. He was going for a minimum of 3. And he's raised 6.8. That is huge.
And I looked at the price chart with us on our Shed-In platform where you can invest in it. You wouldn't be able to trade it on leverage, but you would be able to do so non-leverage. And I've just seen the price just up.
Now, of course, remember that 6.8 million will then be used in theory to buy Bitcoin. Okay, and that will add to the Bitcoin holdings. At the moment, they have 35 Bitcoin. They've got, let me see, another, from memory, about 2 million. So that takes their coffers up to
I have got
9.
A screenshot on my phone from Bloomberg on this. Let me see if I just have some more stats on it.
So we'll take 9 million, divide by, 82,000 Bitcoin in sterling, and that's 109. So he can buy an additional 110 Bitcoin. That takes him up to 150, right? So 150 Bitcoin at 83,000 each is 12.4 million of market net asset value, right? 12.4 million to net value. Then what multiple do you put that on? Well, that's the question. Is it 6? Right, so that would be a 72 market cap. Now, the number of shares we should be told here, they are 187 million. So 6 times 12.5, did I say? 75 divided by 187 is, yeah, see that's a tricky. If you put it on 6 times, it comes in at 40 pence a share, right? So on a 6 times multiple, this should only be 40p a share. So then you have to go, right, a 7 times multiple, right? Or is it an 8 times multiple? So just be careful. If you've got Smarter Web, right, these things take time, and some people are very quick to price in, you know, a few weeks ahead, a few months ahead, which stocks are meant to do.
Yeah.
Right. So that's fair. But yeah.
Also, it'd be partly dependent upon what happens with Bitcoin, because of course, very recently we've seen Bitcoin hit all-time highs, and if that does continue to happen, then of course that would be good for SWC.
Yeah. So yeah, if you're in it, well done. Fantastic. But if you know, if you aren't in, then patience is a virtue.
Exactly.
Right, and you know, we want to take care of the viewers, don't we? We after
champion the client.
Champion the client, exactly. After a fantastic opportunity at 32 pence and a 55% move, then you know, I think we it's never bad to take some profit, is it?
Never.
Right, we could, Poppy, that's it, right. Poppy's saying, explain why it's not a Ponzi scheme. The thing is, you've got an underlying asset, right? And there's a really good article on LinkedIn, actually. Let me pop up the article on LinkedIn of the success of MicroStrategy. Now, if you don't believe in Bitcoin, right, then this isn't for you at all. And I don't know, Poppy, if you're talking about Bitcoin being a Ponzi scheme or something like a MicroStrategy. But the fact is that because people value it at 7 times multiple, 8 times multiple, then you can raise money off the back of that, as long as there's demand. And you take that money and you buy more NAV, and so the NAV grows into the multiple. And it works. MicroStrategy has proven it's worked. Yeah. And they've done it up to $110 billion. Nice. Right, Andrew McKelvey saying they bought more Bitcoin, but are you buying near the top? Well, that's it. It's definitely a call on Bitcoin. And yeah, the guy saying Ponzi doesn't have an underlying asset, right? A Ponzi scheme has no assets, so you know, most definitely not that. Right, I hear talking about Ponzi schemes. The number of subscribers that we have to this channel, we put on a 750 target on Monday, and it's now at 749. So if you don't subscribe, I would be very grateful if one of you can hit that subscribe button right now, and we reach a target, and we're gonna celebrate.
Last time I was on the show, which was around a week and a half ago, we were on 595. Yeah.
So that's what happens when you're not on the show.
Does that mean I'm on the show, it's going to go up?
Right.
Or?
Go on. I want to refresh, and I want to see 750. Are we going to get it? No, we haven't got it yet. Who's out there that's not subscribed? Come on. We're not going on anywhere until somebody hits that subscribe button. I'm waiting.
While you're waiting...
a song all lined up for it as well.
Song? Gonna sing?
No, I'm not going to sing. I'm going to play a song.
Why won't I was just going to say, on the FT this morning, I saw how Trump is basically stopping international students from studying at Harvard.
Yeah, him and Harvard, they're really getting into a fight there.
Crazy.
Oh, I'm hearing there's an update here.
There's another.
Breaking news, we are now hit 751 subscribers, you little beauties. 2 of you pressed the button. And therefore...
I really want to ring the bell now.
Into Bank Holiday Friday. Come on, the bank holiday. Now, that was, it goes back to when I used to work in Johannesburg on the trading floor. On a Friday, of course, we were ahead in time. And we also were in summer when London was in winter. So I used to pee off everybody on the London floor by when the Joburg market was going into a closing auction. I would play that song loud through all the speakers to the London trading floor. And they would still have an hour and a half left to work.
Yeah.
And that was us. And we already, going into the closing auction, we already had beers on the desk ready to pop open as soon as the auction finished. So that song, yeah, holds some dear memories of my days back in South Africa. Right, we've got 7:51. Let's go through Ralph Lauren. I am
So
wearing
stock
the
price.
top.
Was that a coincidence, Rich, or not?
Well, it's the wrong colour because it did all right, didn't it?
Too right. So stock price was up yesterday, reported just after 1 p.m. UK time. This one isn't all sessions, hence you would have seen it on the platform, i.e. the price movement at 2:30. So as it's not all sessions, you can just trade it in the main session, which is from 2:30 to 9. However, if you did want to get in or out of positions in the pre or post market, so Monday to Thursday, that's between 9 in the morning and 1, and today, Friday, between 9 and 10 at night.
So yeah, you see that the number, the stock did drop initially when the number came out, but we, yeah, it finished all right, didn't it?
Yeah. And I was just saying previously how if you did want to get in or out of positions pre or post market, then you can do so. Just call up, and we have a deal in line here at IG. Obviously, the spread would likely be a little larger than what it would be during the main session because it's pricing in the pre and post market.
Right, but fourth quarter revenues rise 8% to 1.7 billion, topping that estimates. EPS 227, also beat. But let's see what they say about forecast. Their annual revenue to increase low single digits with growth weighted to the first half of its fiscal year compared with estimates of a 4.39 rise. So expects the gross margin to be about flat based on the assessment of current tariff rates. And tariffs will impact gross margins in the second half of the year. But I noticed they don't say they'll put prices up like... there we go. Company is assessing additional price actions, right? Doesn't want to annoy Trump by announcing them yet. But considering pricing actions, Nike, of course, have jumped ahead and they've already put prices up.
I think
go on.
I was going to say, I mean, it'd be interesting if there is a recession in the US because I can see the demand for Ralph Lauren reducing quite a bit if there was to be a recession. Because I'd argue that it's more of a luxury good. It's not like it's not a necessity.
Thank you.
All right.
Right, but however, Ralph Lauren got away with it. Deckers didn't. Deckers shares were down after market yesterday and by about 15%. Monkey Man, are you out? Are you out? You kind of had warnings here because Deckers, if you go into a shoe shop, the amount of space that Deckers was getting was ever smaller and ever smaller. And On Running, clearly the winner there of this quarter. So adjusted earnings of $1 a share, better than this year, but of course not as good as they needed to be. Revenue rose only 6.5%, slightly ahead of analysts. And the forecast mean earnings estimate of analysts, let me see. No, that's not the one we were looking for. Where was the story on? Here we go. Deckers said on Thursday it is not going to provide targets due to the tariffs, because of course it does produce goods over in those countries that are affected. And yeah, expects first quarter net sales in the range of 890 to 910. Estimates were 925, right? So they've missed by a couple of percent there. And it's a continued very average story from Deckers. So yeah, Not one to be in, I don't think. Right, Minnie, do you want to go to a break?
Let's go to a break. Let's go to a break.
What we got coming up afterwards?
So, talk about AJ Bell. Also, I want to talk about BYD and Apple, as there was some news from Apple which I read this morning, and from BYD yesterday around midday, just on some sales numbers. So I wanted to go over that.
And then we'll talk about LC Bell.
LC Bell.
Luke Cooper's going to be ringing the bell in 2 minutes.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Right, back we are, 7:58, so we've got about 90 seconds. Andrew McKelvey asking on Warhammer Maker Games Workshop. So we got a story up there. They've had numbers this morning. Core operating profit for the year ending June to be 18.3% higher, to a continued, really impressive numbers there. And it's, so of course it struck the deal with Amazon last year to adapt its Warhammer 40k universe. Have you been into a Games Workshop?
I haven't, no.
No?
No. I've stopped gaming, really. I used to do it a bit when I was younger, but not so much now.
Right. What have you replaced that with?
I like walking. So I walk, like, on average, like a day, probably like 7 or 8 miles.
Yeah.
So I love walking.
I hope you got shoes that are made for walking.
Air Forces.
Right.
I've got the BFW from Ronnie on Games Workshop.
Go for it.
So title is Games Workshop sees FY core revenue at least 560 million GBP. Sees FY core revenue to be not less than 560 million pounds, up from 494.7 million year on year.
Just if the guys can get the chart up while we're talking about it there.
Core operating profit is estimated at not less than £210 million versus £174.8 million year on year. And then on FY profit before taxation to be not less than £255 million versus £203 million year on year.
I mean, amazing. What a stock, up 50%. Right, bell in hand, Mr. Cooper. Yeah, 50% in the last year. Absolutely incredible. Right, go. 3, 2, 1. That's it. Bank holiday Friday, people. We are up and ready for the weekend. A little bit of a delayed opening. I think it's because Mini Cooper didn't have the bell in his hand on time. So you can see there the leader of the day, ITV, GSK, British Land, and B&Q up there.
British Land reported yesterday, I believe.
There's yeah, nothing too extravagant there. We've got yeah, Rank down 1.6. The Pru, there's hardly any decent moves here.
No, got M&S down 0.26%. Vodafone down 0.08%.
Looks good though, doesn't it? It's got to say, I see that Poppy on the chat there saying, yeah, Vodafone just it's looking pretty good. On a quiet day like this as well, right? It looks to me like basically those kind of moves, everybody's taking today off and they've already gone on holiday, Pete Ward style, right? It's only some mugs that are left holding the baby. So on a day like this, remember that gigantic buyback pushes the shares up on days like this. So let's see where, how many did they buy yesterday? They bought 1 million. Okay, forget everything I said. Why are they only buying 1 million shares? That's bizarre. Anyway, right, 1 million. Let's see what they bought the day before. They bought 1 million. Okay, so they're on a go slow.
Slow and steady wins the race.
Slow and steady wins the race. That's right. Oh, sorry. Right, let's get back in then. What are the movers on the upside? Do you have a Games Workshop price? Minnie, we'll have to get you to start bringing your computer in.
Should do, yeah. I've got my notes, but I guess a computer would be better, right?
Well, it depends. It depends whether you want up-to-date prices or to write down the ones from last night. Games Workshop down 1.5%. Trading, what's that? Is that £154? Are they not going to do a share split at some point, do you think? Strange one, isn't it? Yeah, there we go. So after a huge run, after being up 50% in a year, Games Workshop down 1.5% on numbers. Oh dear. Or is that just because Mini Cooper said that he's not into gaming anymore? Oh, yeah, see, they're selling off more. Right, what else did we have to look at?
How's AJ Bell?
How is AJ Bell? Take us through that story.
Sure. So I got my notes, which I did last night.
Yeah.
Just a little bit on AJ Bell first. So reached an all-time high of £90.4 billion in AUA, which was up 13% year over year as of the 31st of March. Since March last year, AJ Bell has gained 90,000 customers, bringing its total client base up to £593,000. Over the past 12 months, share price has increased quite a bit.
Not open yet this morning. So, yeah, still waiting for that one to show a price. So we'll keep up to date. Now, there's another story in the the Times this morning. Rio Tinto CEO makes surprise exit after 4 years. I missed this one yesterday, and no reason has been given for Jakob Stausholm leaving. A bit of an excuse from the chairman, sounds a bit fishy to me, described it as a natural moment to appoint Jakob's successor. So we don't know what's happened here. And it hasn't, Rio hasn't messed up. Rio, well, that we know of. There wasn't a clear strategy problem. But yeah, Rio's was down 1.4% yesterday, 45.87. Let's get an update on that this morning. This just leaves me with some questions over what's going on there. Down another 30 basis points. But if we have a look at the chart, I think he's been around 4 years. So let's have a look at the weekly chart. Yeah, that's going back a little too long. 4 years under the CEO takes us to about there. And let's extend it up. Sorry, excuse me. And you can see it kind of just fell out of favor there from September last year. And then, of course, the tariffs. It's recovered from the tariffs. And it's, yeah, a little bit in no man's land, really, isn't it? But
what's that client sentiment looking like on Rio Tinto at the moment?
Client sentiment is, sir,
97% long. Wow.
You don't often get that length, do you? Right, what do they say on the fundamentals there? We've got, it always looks cheap on the PE and dividend yield. So
great dividend yield.
Yeah, it is a good one. Oh, and no tip ranks, that's weird. So yeah, Rio's just a bit concerning there. Is there more to come from that story? And who's the new CEO going to be? Let's go to a quick update in Europe. The big movers in Europe are... Mini Cooper, take us through those if your eyesight allows.
So we've got Bayer AG up 1.63%. Excuse my pronunciation. ConocoPhillips NV up 1.42%. We've got Kering up 1.14%. Ubisoft Entertainment up 0.93%. We've got Adidas up 0.78%. We've got Louis Vuitton up 0.66%.
All right, let's see the moves down.
And then down we've got Deutsche Bank down 1.83%. We've got Puma down 0.93%. Porsche down 0.59%. Deutsche Telekom down 0.5%. We've got SocGen down 0.14% and Hermes down 0.12%.
Right, now that has taken us nicely into Rolls-Royce, and my goodness, Andrew McKelvey points out that it is now over £8.50. And step up she does into the chat, Kate Murphy. Kate Murphy, tell us your percentage gain on Rolls-Royce.
Since COVID, it's gone up like a crazy amount, isn't it?
She sent me this yesterday, and I looked at the number, and I was like, that doesn't even make sense. Kate Murphy, tell us your percentage gain in Rolls-Royce, and I don't think has sold a share either. Has kept it all the way up.
I think from COVID, it's actually gone up more than what Nvidia has.
Really?
Yeah.
Wow.
No one ever talks about it as much.
Oh, they do in this country. I think everybody had a nibble on it. And Jamie that comes on the show sometimes, he did very well. And yet, a lot of people have this has been a huge winner for them. And well done to anybody who still holds it, because that is remarkable.
Very tough, yeah.
That's Kate Murphy in percentage terms, right? 1,091% gain. I don't think I've ever had that.
That's nuts.
I'm pretty sure I've not had that much. That's astounding. Don't forget to top slice. And that's, to be fair, that there's our theme of the morning. I'm saying smarter web company, right? It's up 50%. Maybe take off some of your profit, just the profit. Keep the, you can keep the original amount in, take the profit out, and that's how you make sure you never lose.
Exactly.
But that doesn't help you to win like 1,000% returns, right? That's having real belief in a company and a strategy, as as Kate's had in Rolls-Royce, the rest of you have had in Rolls-Royce, and that is, really, really impressive. So, right, FX and commodities world, what are we looking at, Luke Cooper?
Let's have a look.
Oil down 60 basis points yet again.
Yeah, all down 60 basis points. So, US crude down 63 basis points and Brent down 57. We've got spot gold up 0.98% and silver's also up 0.45%. And we've got spot platinum up 1.32%. We have got nat gas up 1.39% and copper up 0.38%.
Did I hear a rumor that we're starting to have coconut on the platform?
Coconut?
Yeah. I'm sure Chris Beecham told me. Maybe it was a late April Fool's or something. But he was telling me that we're going to have coconut prices.
Coconut prices?
No, cocoa.
I think he must be having you on.
Coco Nala. We'll get more on that.
Elliot may know later.
Yeah. Good. But yeah, it's interesting. Cocoa prices. That's just caught my attention.
It's funny if you say to Elliot and Elliot goes, "What are you talking about?"
Yeah. Yeah, I am the
Chris
coconut.
is just having you
on. Good stuff. Right. Yeah, Andrew McKelvey saying, why are you not on a beach somewhere? Well, she is. She's currently in New Zealand, and we were getting pictures in from Bali next to the swimming pool about a month ago. So, and Mango, is that true, Mango? Mango saying he's single. You're single for 1,000% return. Aren't we all? Oh, get in trouble. Right, 11 minutes past 8. You are watching Trade Live with IG. We've hit our target for the week. So don't even subscribe.
No, don't say that.
Oh, look, don't unsubscribe. That would be actually quite a good 1-0. Somebody like Boise will come through and unsubscribe. Just
got to overperform, Rich. I can then put this in like my performance review.
Yeah, you were on here when we reached our target. Yeah. Right, we won't talk about targets for next week because we don't want to spoil a good weekend. 800. Okay. I'll tell you what. Let's set this as a live target. Let's say our number of subscribers has to be more than the Rolls-Royce share price. The share price right now is 848.
And how many subscribers by when?
Well, 848.
But by like when? What
Next
time period?
Friday.
Next Friday.
It has to be, but if Rolls-Royce comes down, then we can relax a little bit.
Yep.
So I am going short on Rolls-Royce relative to our number of subscribers. Yeah, it's a pair trade, exactly, Terence. Thank you. Right, let's have a quick look at the currencies. 134.60. That has been a pair trade gone wrong for me because I am short the mighty Great British pounds, but not really, because all our money's in pounds, isn't it?
Yeah, dollar's just getting weaker and weaker.
Yeah, that disbelief in the
bond auction,
American exceptionalism. And then, yeah, euro trading 113, and the yen, you know, Japan got its own problems, obviously, 143.40. We're going to go to a quick break, and then we're going to do some, we're down to do fast markets. I think we might pop a little Q&A in for Mini Cooper as well.
Let's go. Also, I want to talk about BYD and Apple specifically.
Excellent. Join us after that. And yeah, we'll be back in, I'm going to get hot chocolate, so let's call it 2.5 minutes. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, Forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Right, welcome to Fast Markets, and I see R6Sena in the house. R6Sena, I have sent you that email, Monkey Man. Thank you very much for letting us share that. That is, of course, of the script to go into AI to do all your analysis. Now, talking about analysis, we've got a very interesting guest coming up next. He is the head of strategy at Panmure Liberum. So that is Joel Clement coming up. Angelina is going to be grilling him about all things macro, then the questions around the US economy, and of course, with this big week in bonds as well. So that is coming up in about 15 minutes' time. Don't go away, because Mini Cooper is going to run you through some Apple and BYD.
Let's start with BYD. So read this. This came out yesterday on Bloomie at 10:56 UK time. Headline was BYD registers more pure electric cars than Tesla in Europe for the first time ever.
Yeah, and look at that share price reflect it as well.
Yeah. BYD in April registered 7,231 new battery electric vehicles in April. This is up 169% from a year ago. Also much cheaper.
Well, and we talk about, you know, American exceptionalism coming to an end.
Yeah.
Whoa, that chart is just telling you there are alternatives to just being long an S&P 500 tracker. All right, we've shown you Rolls-Royce this morning. We've shown you BYD.
Yeah.
We've shown you Smarter Web Company. You know, there's other stories out there apart from, you know, NVIDIA sideways for 12 months.
Yeah. Yeah, everyone still talks about it. All the time. All the time.
Yeah. So, yeah, it's good not to get caught in the past, isn't it? Now, is Apple another stock caught in the past?
Yeah, so with Apple, again, read this morning on Bloomie. So Apple's top supplier, which is Foxconn, is moving forward with a $1.5 billion investment in a new component factory in China.
So that stock not doing anything since July 2023.
Sorry, my bad, in India. So story from Bloomie, it's specifically near Chennai. Donald Trump tells Apple CEO in US, not India, the move comes at a time when Apple is deepening its manufacturing footprint in India, even as President Trump publicly criticized the company for expanding abroad. Trump claimed he had urged Tim Cook not to build factories in India unless they directly serve the Indian market.
Mate, you're a cracker. I love having you on this show.
I heard that noise, I was like, oh,
yeah. Oh, mate, I get it every time I mention Vodafone. One of the best performing FTSE stocks of the year. Right, good stuff. So, on the chat, have you got anything that you would like us to look at before we go? IONQ, yeah, now. This is another one that I hear about every now and again. And what happened yesterday? Maturin, talk us through that. Up 150%. Yeah, got that. So that stabilized around the tariff sell-off, of course, and it's just gone one way since. But what came out yesterday? Let's have a look at the news there. Partners with Einride to innovate quantum solutions for autonomous logistics. How's your eyesight for reading that, Minnie?
Let's go. A leader in quantum computing networking has announced a new investment partnership with Onride, a global freight mobility company known for its digital, electric, and autonomous technology solutions. This collaboration aims to develop quantum applications for optimizing fleet routing logistics and supply chain solutions. By integrating IonQ's advanced quantum systems with Onride's expertise in autonomous fleet logistics, the partnership seeks to enhance efficiency, reliability, and sustainability in the global freight industry. It's
so funny going back to autonomous fleet logistics. My first ever investment it must have been 1999, was a company involved in fleet logistics in the UK. And it was called Minor Planet Systems. And this thing, I had read the full annual reports. I went through all the stuff like that, through the accounts, and I thought this thing is brilliant. What I didn't know at the time was that the web, kind of the craziness of all the valuations was also going on. Of course, 1999, everything was getting pumped.
You were 20 years old at the time, 21, right?
That's right. Yeah, 19. And it was, I just believed in this thing so much. And I borrowed £2,000 from somebody.
Which is a lot more than £2,000 is now back then.
All right, Minnie.
No, I did not. I didn't mean it like that.
Because I already bought £2,000 worth, but I was so sure about it, I borrowed another 2,000, and the thing, oh my goodness, when the bubble burst on the internet boom, then it was down, I don't know, 75%, something like that.
Yeah.
So yeah, I learned my lesson there. But it's interesting, these fleet logistics.
Yeah, you lose some, but then you win some.
Yeah, exactly. Right, so that's IONQ. Let's take a quick look to see if we've got a tip ranks. No, we don't. What's up with tip ranks this morning? There it is, $11.3 billion. And now trading at 44. So it has been higher, hasn't it? It's been at 54, yeah. But approaching back. Shows you, doesn't it? When people talk about the stories and it gets pumped up, and you would have thought that this was absolutely crazy back in January, and you get a sell-off and you think, oh yeah, that was always crazy. Gets down to $20, but then they come back, don't they? A bit like Amazon did from 2001.
Because that was the time, I think it was like Jan-Fed time, when all the quantum computing stocks went like nuts.
That's it.
There were like, I know on our platform, there were like 3 or 4 of them, which were just constantly up, and up, because there was talk about how it could potentially crack Bitcoin. If that was the case,
of course, yeah,
it could potentially be worthless.
Kirky, very interesting. An observation from Kirky. Tomorrow's the 9th of April. Tomorrow is 45 days since the 9th of April, which is when there was the announcement of the 90-day pause. So we're halfway through already, and we've had one kind of makeshift deal, which is interesting. Talking about makeshift last-minute deals, have a look at the story in the Times this morning about what an absolute calamity we had with Keir Starmer signing this Chagos deal, right? So basically, we are giving the Chagos Islands back
to Mauritius, is it?
To Mauritius, exactly. And it was all set to be announced yesterday with a big kind of, handover and all the press and everything. And this woman here with her British passport, she managed to get a High Court judge to pause the deal in the middle of the night on Wednesday night. And so Keir Starmer woke up, you know, ready to go to his big ceremony, and it was off because a judge had ruled against it. So then, of course, the government had to tell everybody that was coming to the ceremony, like, hold off, you know, it's been ruined. But they got another High Court judge to come in yesterday morning, first thing in the morning. The lawyer had to go on a video call from New York in his dinner jacket. He was out to dinner. And argue that, you know, this was not going to be a terrible thing for the inhabitants of the islands. And they managed to get it through. So now we give the Chagos Islands back, but we pay £100 million a year to lease their military base, which is used by the US and the UK down in the Chagos Islands. So yeah, just a really interesting read there on how High Court judges can scupper things.
Well, respect to that woman.
And and respect.
Better play.
Yeah. Fighting it all the way. Good. Right, that's us going to run quickly into a break. Then we've got Joe Clement, Head of Strategy at Panmure Liberum. Of course, Panmure Liberum, fantastic. Liberum actually used to be in the office next to us when I was at Macquarie. And great house. They always had a lot of fantastic calls on the mining sector. Which 2008. Yeah, exactly. Yeah. They were the first ones to call an Xstrata bid back in 2008, and they also called the Rio's BHP deal splitting up. It was Liberum. So Panmure Liberum, great house, and we've got their Head of Strategy coming up next with Angeline. We'll see you. Have a fantastic weekend. I'll be back with Elliot Harris.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey trader friends, welcome back, and I
I'm so excited because I have a very special guest for you, and it is Joachim Clement from Panmure Liberum. Thank you so much for joining us. We have been waiting for you because you've been on flights.
Yeah, I've been 3 weeks jetting through Asia trying to get the pulse of big Asian institutional investors. And yeah, they are very excited about European equities all of a sudden. It's crazy what 3 months can do for you.
I know, right? Did it, you know, for some bizarre reason, start sometime, let's see, September, October last year?
No, not really. It mostly started on the 3rd of April, to be perfectly honest. The shock of the 2nd of April Liberation Day was really tremendous there. And sovereign wealth funds, government pension funds all over Asia have been asking me questions about how to reduce their US equity exposure and their US government bond exposure. And I think some of the fallout of that is what we're seeing in markets today.
For those of you that don't know, so Joachim Clement is Head of Strategy at Panmure Liberum. Give us a quick snapshot of what you do for our viewers who are just getting to know you now.
Well, to be frank, I spent most of my time on the buy side, managing money for family offices, but nowadays I'm heading the equity strategy team, focusing on European equities and macroeconomics and multi-assets across the world.
Basically tells them what they need to hear, and you're brutally honest about it, right? Let's talk about the bond market reaction recently. Ticking time bomb?
Well, it's definitely a disaster that could happen going forward. The bond vigilantes are finally awake after decades of massive US deficit spending. It looks like the market has put the US Congress on notice about this wonderful, big, beautiful bill, as they call it in the US, which unfortunately is going to push US deficits to 7% to 8% of GDP over the next decade. And that just 6 months after the Republican politicians said that under Joe Biden and the Democrats, the US deficit has grown to the largest in peacetime ever. Well, not to outdo the Democrats, the Republicans have decided to add another percentage point or so each year on top of that.
Now, loads of our trader friends here, you know, they've been waiting for you to come because, you know, obviously a lot of people are really exposed to equities, growth, particularly, you know, tech stocks versus value stocks. You know, what impact is this likely to have? I guess the question is, what is the best case scenario, the middle scenario, and what is the worst case scenario if this becomes really messy, this, you know, bond ticking time bomb explodes?
Well, the worst case scenario, we have to leave that to the end because I'm German and I love to be pessimistic about the world. We are world champions.
Also, it's only 8:30 in the morning.
I know,
so we don't
I know.
want to depress everyone.
It's a little bit too early to reach for the whiskey or any other strong drink unless you are somewhere in Asia where it is 5 o'clock somewhere. But in essence, I would say at this point in time, we are still in a relatively orderly readjustment of bond markets where investors are simply pricing in higher deficits and correspondingly higher risks of a default in the US. 5-year CDS's spreads for the US have increased quite substantially, are now almost as high as they were in 2010, and substantially higher than, say, Germany or the UK for that matter. And that is also reflected in long-term government bond yields, not just in the US, but pretty much most countries. Japan is in the headlines for that. The UK gilt market is following in sympathy. The only market that is a little bit insulated from that is Germany and then obviously Switzerland, the two safest government bond markets anywhere. I know that some hedge funds are introducing a new base trade where they basically are replicating US treasuries synthetically by buying German government bonds and then using currency and interest rate swaps to simulate a treasury. So Germany and Switzerland a little bit out of there, but a repricing of US, UK, Japan. And what that does is it increases the discount rate for future cash flows with which we assess the value of tech stocks and indeed any stock in this world. And what that means is, as we get that repricing of treasuries, we also should get a devaluation, a derating of high growth stocks. So the more companies' profits are in the distant future, the more they will suffer. That doesn't necessarily mean bad news for the Magnificent Seven, because some of them actually are incredibly high cash generating stocks. They will do just fine. I'm perfectly happy with a Microsoft in my portfolio, but others that will suffer more from that.
So like the smaller cap ones and the ones with not such strong cash flow.
Absolutely. Weak cash flow, high financial leverage, huge debt loads. That's what you want to avoid in the next 3 to 6 months, definitely.
Just whacking up my chart, producer Phil, you know, just showing you the movement there, especially on the long end, right? We saw this reaction there. We're not seeing much of the reaction on the short end of the curve yet. What kind of red flags are you looking out for that you know, might then sort of say, well, you know, this is looking bad. We could see a potential hard landing scenario?
Well, I would say let's focus on how the big, beautiful bill moves through the Senate now, and whether there will be any adjustments in the reconciliation process that reduces some of the deficit, either by forcing more cuts to government spending or taking out some of the tax cuts that are in that bill. If that doesn't happen, I would expect the bond market to seriously push for higher treasury yields. I personally have been saying since the beginning of the year that I expect 10-year government bond yields in the US to go to 5% or higher this year. I think we will see US treasuries move in that direction. And if that happens too fast, I think the Federal Reserve will have to step in to avoid a hard landing and a massive chaos in the treasury market going forward.
Now, plenty of people on the chat this morning. Thank you so much for getting us to 750. You didn't hear us, but producer Phil, Terence and myself were outside going, whoa! Must have heard Joachim was coming. We were just on the cusp and we got there just before you came. Maybe it's that Twitter image video that I sent out this morning suggesting that you were arriving imminently.
Well, I wouldn't know. I'm not on Twitter anymore.
Right. People asking before you came, you know, is this a trust moment? Is this, you know, just backed by a huge, you know, the world's biggest economy? Is this, to you, a trust budget moment?
It could be. It could be if US Congress doesn't read the signals.
Raul, go and get that whiskey.
Absolutely, absolutely. Or any other stiff drink that you might want to have. Effectively, the bond market, the treasury markets is telling Congress, you need to change something here. And if Congress doesn't listen, the bond market will throw a hissy fit, in my view. It's a little bit like what we've seen in 2008. For the older ones amongst you, that was the global financial crisis. I know most of us don't remember that or don't want to remember that.
Don't want to remember that.
Don't want to remember that?
To cut it out from my memory.
Well, here's the anecdote, which was the TARP program, which was a $4 trillion support bill by the US government to support banks at the time. And in its first reading, Congress didn't approve that bill. The day after that, the Dow dropped 7%, and Congress rethought and kind of went back over the books, and 5 days later, we had the TARP aid. So I think something like that is entirely possible if Congress doesn't come to its sense in the next couple of days.
Wow, wow. Right, we don't have much time left, but I want to move on to something that is really close to our hearts as well, because I know, producer Phil, that someone's just messaged to say Simon Popple, who's going to talk about gold with us coming up, is downstairs. Defense. So all you trader friends hear me talking a lot about defense stocks here, the Henkels, the Rheinmetalls, and the SEI, and also which happens actually is coming in November. And also we talked about Avon, this Avon Protection, not Avon Lady. The reason for that, and one of the reasons I'm very invested in this space is because way back when, before Russia invaded Ukraine, when every media network, including the BBC and Bloomberg and Reuters, were saying, oh, it's not going to happen, it's not going to happen. I had a call with this man. And I was looking at WTI, and I had a call with you, and the conversation went something like, remind me, you said, have you got access to pictures, Ange?
Yeah, I know. There was actually a think tank that had satellite images that showed the troop amassing under the Ukrainian border. And that was pretty much the best signal we had that Russia was serious about threatening Ukraine and invading.
And then at which point, on the phone, I then said to Joachim, what is that rustling in the background? Are those maps? Can I hear like paper, big sheets of paper or something, or maps?
Yeah.
And then we ended up looking at treads.
Yes. No, I'm a sucker for a good map, just like you are. So we have that in common.
So tank treads, as Joachim will explain further, there are the winter ones, and of course summer ones, and the ones that we were looking out for were the winter ones.
Yes.
Which confirmed that, yes, indeed, they had this small window in which they had to attack, and they did. And so there you have it. Sometimes it's about understanding what to look out for. Speaking of defense, we have RS Saxena, Andrew McKelvey, really top traders in the space. They really know their stuff. Avon Protection. We had a question earlier today. I think it was earlier up in the screen, guys. Can you get me up there? But I think it was Arsax asking whether or not Avon Protection. I know you're bullish, aren't you, on Avon?
I am bullish on defense stocks in general. I think we're in the middle of a defense super cycle that, thanks to Readiness 2030, the European Union's defense program will continue at least until 2030. I do think that some investors will think about taking money off the table the moment we get clear signals for a Ukraine ceasefire. I think that will just be a short-term setback, simply because what we need to do across Europe is replenish our inventories and prepare for a potential confrontation with Russia towards 2027, 2028, because the IISS think tank just last week reiterated its assessment that if we get a ceasefire in Ukraine this year, Russia could be rearmed and ready to attack a Baltic state in 2027, when Trump is still in office, and would be reluctant to help them.
I'm looking at the lower Baltic states, you know, where I think it'll start south. I don't know your view.
It's hard to say. Yesterday we had some news that the Finnish military is clearly watching troop amassing on their border.
Oh, interesting.
Yeah, so the Russians are building up troops on the Finnish border. Where it will be is, I think, a very tactical decision that Putin and the Russian military will decide on when you get to that bridge. But in the meantime, keep on buying defense stocks. I continue to love Rheinmetall and Saab because they're the best short cycle, meaning artillery and tanks and stuff like that, investments. With the EU-UK defense deal that was announced on Monday, we still need to have the details come through there, but I think that will in particular help UK smaller and mid-cap defense companies like Avon Protection, but I also like Chemring, which makes a lot of explosives and ammunitions for Europe.
We have a question from Jesse14. Jesse14, you have not sent me your address yet because you won last week's Friday number of the week. So you have a prize. Please send me your address on ask@ig.com and we'll get that sent out to you. Does Joachim think that Germany will be using a large amount of the 500 billion euros defense investment on US defense hardware?
Well, the 500 billion is actually not the defense investment. It is Germany's infrastructure spending, and that's another very interesting investment topic.
Yeah, how much of that will be allocated to?
Nothing of that will go to defense. 10% of that will go to energy transition, so wind, solar, and electricity grid connection, and the other 90% to housing and traditional infrastructure. Germany will, on top of those 500 billion, increase its defense budget, probably towards 3% of GDP. We don't have any exact numbers, but it will roughly be 300 to 500 billion euros on top of that infrastructure spending. And because Germany will participate in the Readiness 2030 program, most of it will stay within European defense contractors. So it's, again, the Rheinmetalls, the Hensoldts, the Saabs, the Leonardos.
Oh, the Hensoldts. I have Hensoldt. And Rheinmetall as well. Mango. Saying, good question, Jesse. But from what I've heard, they'll start up factories, also EUs. That's what we were just talking about. Maturin, good morning to you. Is Avon Protection the same as Avon Technologies? I believe I'm right in saying that it was.
It was Avon. It was called Avon Rubber. Then it was called Avon Protection. Now it's called Avon Technologies.
Yeah. The renaming protocol, a bit like what is it? Nokia's. Well, Nokia used to be a tire company. Is that right?
Actually, Wellies, rubber boots, and then it reinvented itself to make phones. Now it doesn't make any phones anymore, even though there are Nokia phones around still. And now it just makes telecom hardware and is very much involved in the upgrade to 5G and things like that.
Arthur Fox Haig as well, one of our trader friends here, very loyal trade live with IG client. Gotta recommend YT Times Radio's recent interview with former military intelligence officer Malcolm Nance, hilariously disparaging Trump's stupid plan to annex Greenland. I heard that they went knocking on the doors, the administration, Trump administration, everywhere to try and find a place that would house the visit and the First Lady. And
I know, and nobody would want to. I mean, they basically, I'm very proud of our Greenland friends for basically turning their backs on J.D. Vance and the First Lady and the Second Lady. In essence, they want to kind of be more assertive about Greenland. Trump always says we want to annex Greenland. Funnily enough, the US doesn't need to invade Greenland. They're already there. They have two bases there. One of them is an Arctic base that is basically their defense against and an early warning base against a nuclear missile attack from the Soviet Union, now Russia. And the other one is a submarine base. So in fact, you don't need to invade it. It's just bluster.
Overrun.
The usual Trumpian bluster.
The smoking, what is it? Smoking, there's a Russian term where you're punching with one hand, but actually you don't want people to know what you're doing with the other hand. There's a Russian term for this.
Well, smoke and mirrors is something else, but
no,
it's
this is like diversion, yeah.
Okay, all right.
Diversion. Arthur Fox Haig saying, titled, How the US military would seize Greenland if Trump forced them to. Yes, so we're talking about that, but never Avon prophylactics.
Avon prophylactics. No, not quite.
Mango. Question here. Will Mercedes-Benz start building tanks again? Actually, Mango. Also, I love it. I have this thing that Rich gave me this morning because you went to that event. Thank you so much. And Mango, one of our clients, ta-da! Is it your wife or you that has this business that creates I think it's 3D printed.
Oh, yeah.
Yes, and you brought some, and everyone in the gallery also saying thank you, Terence, and producer Phil also saying thank you. They've got them in the studio here. You should come and visit sometime. But back to your question, will Mercedes-Benz start building tanks again?
Not so sure about the tanks bit. They're already obviously building a lot of trucks, that some of which end up with the military. But interestingly, or funnily, Continental, the tire maker, is already building tanks. Not themselves, but because Rheinmetall had such a lack of factories and workers over the last 3 years. They have, since late 2022, have hired Continental factories, including their workers, to help them make some ammunition and tanks. And just last year, they entered into an agreement with Continental that workers of Continental who are looking for a job, because obviously the automotive industry is in dire straits, can find jobs at Rheinmetall. And similarly, Hensoldt has done something similar. So really, if you have a massive shortage of skilled labor or factory capacity, which the German defense industry has, because let's face it, we haven't really invested in that for the last 80 years for some good reason.
I wonder why.
I don't know. I'm a German. I don't know what happened 80 years ago that kept us from investing in defense. I don't know. Anyhow, switching topics. So now, in order to get the bottlenecks resolved, we need to go to the automotive industry, which is the closest match to the skills needed in defense.
Exactly. And if you think that you are, or rather you're bullish on the space, then I would also say that due to what Joachim just mentioned, I'm looking at companies in the Eastern European side of things, because they have a lot of labor there. For some reason, many Eastern Europeans that I've met at these defense summits, they're all really good at maths and programming.
There's a strong history all over the former Warsaw Pact, so all the Soviet-controlled countries in Eastern and Central Europe. They have a very strong tradition in maths. The reason is that back in the Cold War days, they
couldn't get computers?
They couldn't get computers. To be really good at maths, I had to do it by pen and pencil. The end result is that you still have an awful lot of really good cybersecurity companies there in particular. Especially in the Baltics now, you have quite a really good cybersecurity industry.
Now, speaking of that, I am slightly disconcerted. So I hold Kinetic, often drive past Kinetic in Ringwood, and I know you don't like Kinetic. Why?
Well, I don't like it in the short term. The long-term outlook for Kinetic is excellent, but their last quarterly results, or the last interim results, they said they have problems delivering on their US missile contracts. And it seems that they have delays in delivering their projects. And so now everybody is kind of looking at, you can see there how much it sold off. It wasn't a pretty picture after the last results. So the end result is that we're now in a situation where we're kind of in a holding pattern and wait for the next results to come in to see how they are advancing there. Until I get an all clear on that front with the project's deliveries to the US Department of Defense, I would stay on the sidelines.
They are integrated though, so they're not, particularly vulnerable on one side, one sector, one product. They are diversified. On the longer term chart, this is the monthly view, trader friends. It is on an upward, you see upward trend there, and also on the weekly, it is also, other than that blip there, still an upward trend observed, and on the daily as well since the swing low beginning of April. Phil, you're trying to say something? Right, it's just giving me the timing. We only have one last comment. So, trader friends, if you have a question that you're dying to ask Joachim, please put it to him now whilst I'm going through the technicals for Kinetic. Very strong green bars there, except for the, it's right now down 0.75%. They offer everything from testing, evaluation, and as I said, they're based in Ringwood, and their focus is, I often see them in the mission rehearsal stand, so they help companies and help governments do that, rehearsal, making sure that they are, what's the term?
Wargaming?
Like when you're ready to deploy.
Yeah.
So there's a term for it when you're like, you can deploy straight away. So
Okay.
they get them in readiness for that. So let's have a look at the chat here. Tangs, Mercedes, we talked about that Mango. If Mercedes were to ever offer you a truck, and they have many, go for the, is it Zetros, the one that starts with Z? They've got Arox as well, but the one that starts with Z is the one that is compatible with the Hercules.
Yes, and that is a multi-purpose truck actually that will do defense and civilian and specialties like fire trucks and fire engines and stuff like that.
Yeah, last but not least, very quickly, you like Rheinmetall. One quick note on Rheinmetall, because we then have to swiftly go to all sessions.
Well, Rheinmetall, it's the poster child of the German and European defense boom. It is building the tanks, it is building the artillery and the ammunition, really the stuff that we need in Ukraine and the stuff that we now have to rebuild very, very quickly in order to counter Russian threats.
Cool. Thank you very much for joining us, and we hope to welcome you back on the show very soon. If you'll take some time out from your travels. Joachim travels a lot to Asia and also to the US, so every time I call him, it's in a different time zone. I often accidentally...
Sometimes you call me at 3 o'clock in the morning, yeah.
Yeah, that's the thing. Jennifer's lucky I'm not calling you. Right, stay where you are, because we are going to have all sessions in 4 minutes. And also we're going to have Elliot Harris back here with Rich to talk about how volatility is looking in the setup to the coming week. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
We are back together. I've missed you, buddy.
The dream team. It's been quite a while, Rich.
I think I've missed you for the month. So, God, we've had a lot happening, haven't we?
It's all forgotten now, isn't it?
Yeah. Well,
Still won the teacup and all that.
All that stress that we had, you know, when you had the busiest week of your life, probably.
I've never seen you run so fast.
Oh, geez, yeah. God, I was having to run out of here. We just got all sessions about to start. Run out of here, run across to Elliot in my break, try and roll some options over, and then run back in that 3 minutes. Classic. Right, there we go. So the all sessions are open, Elliot. What are you seeing there? First moves.
I'll let you drive this. You're far more up to date all these single names than what I am.
Well,
I'm a macro man.
We got Palantir up yet again, 123.50. Let us know if you're still in Palantir, people. Google recovering from yesterday, up 80 basis points. GM as well. What else sticks out? Tesla, 343. Wow. Eli Lilly, 717, hasn't really kicked on from the positive that it got. Walt Disney on $111. Again, jumped up there after numbers, but hasn't really kicked on. And then on the downside, before Elliot and I get into our chat, we've got Citigroup, small down. But generally, it feels very like a Friday before a bank holiday on both sides of the pond. What do you think, Elliot?
Very much so, very much so. I don't expect any fireworks to be coming out of today. Obviously, you've got UK bank holiday Monday and a US bank holiday as well. So it's quite rare that you have kind of the two major sessions, if you like, both off. So yeah. Asia overnight was very quiet. It was a quiet session last night. Volumes were significantly down. I'd be very surprised if we have much action today at all.
But it's Friday, right? It's the start of summer. We know what happens when Americans think they're going on holiday and they're excited and it starts to get sunny. They just buy it, don't they?
Yeah, and well, I guess we might come on to that in a minute. The skew that we've seen on S&P, certainly on the short term, so more towards the front end of the curve, so maybe the front month or two, skew's got really quite significantly steeper, if you like. So what I mean by that is the cost of puts relative to the calls, the same direction, gets marked up, gets bid up in the market. There's a little bit more of an increase in the hedging demand, I think, because S&P's bounced back so far and also so fast in the last, say, 4 to 5 weeks. The market's seen some significant put buying over the last week or two. And as I said, mainly on the front part of the curve, so certainly over the end of month contracts and on the weeklies, probably going out to June and July contracts.
Yeah, so I've got the Junes up there for you on the S&P 500s. And first of all, first things first, Elliot, bloody well done. Look at the size of those spreads that Elliot has managed to squeeze down to. That's
yeah, it's been a significant improvement on our S&P. We will do the same on other products, looking to do the VIX next and then out to the NASDAQ. European indices I'm currently working on as well. So trying to get these spreads as tight as we possibly can, because as you commented on to me during the week, it makes managing your exposure a lot easier.
And what about the FTSE?
FTSE will come as well. Yep.
Good.
FTSE is a
market,
drive a bus through
that.
FTSE were actually in line with market, if not tighter. FTSE as an options market isn't anything like as liquid as S&P. Okay,
that's sad, isn't it?
I won't be able to show you the degree of improvement on FTSE that I have on S&P.
Yeah, but that
as much as I'd love to.
That's incredible. 1.1. So yeah, so take us through what you were talking on the skew there. If we look at, for example, the 5,800 puts for, I believe this was June, 20th of June expiry, 5,800 puts against the sort of 5,910. You just seen a little bit of skew pick up on the puts.
Yeah. What expiry have you got up here?
So this is June 20th.
Okay. Yeah. So if you just scroll up 1 second, let me.
Do I go into the weekly
chain? No, that's fine. So let me get the same chain up my side. Yeah. So it's kind of flattened, if you like. It's more obvious. Say if you have a look, say go out to December.
Oh, right, okay.
Just kind of where the call skew's been eased slightly, if you like. So well, what we've seen is
good, because that's what I'm short of.
So, okay, right. Well, it's been significantly knocked down. I read a lot of articles and a lot of analysis in terms of where the skew shifts to. So currently the 6 months skew on it on S&P is down in towards the 20th percentile. On the put skew, it's up trading in the 50s.
Wow.
So it means that in terms of historical skew, we are getting on for reaching the lows now on the call side, and the puts are still middle of the road, if you like. But that's been marked up from somewhere in the 40s a week or 10 days ago. So if you have a look and say, let's for argument's sake, say deck S&P is 59.75.
Mm-hmm.
If you were to say have a look at let's say the 66 calls, roughly 52 at 55. Just for argument's sake, let's take the underlying as 6,000 just to make the maths easier.
Okay.
So roughly 600 points away costs you roughly 55. 600 points on the downside, so you're looking at what, a 54 put around there?
Wow.
Costs you 158.
What?
Yeah. So
that's
the
crazy.
skew is really, really strong. So for me, all right, I don't think those 66 calls, I don't think anyone could ask that they were cheap. But if you've got a view, and for me, it's all about the AI view. And also, I think any kind of bad news coming off the table, so things like banking deregulation, more tariff talks, for me, I think a lot of them really benefit back to the US economy, back to US equities. 6,500 on the S&P by end of year, I think is very, very attainable.
So for me, you're making me feel ill, Elliot. What happened to my favourite bear? Let's take the let's take the screen off there. That's depressing me. So you prefer the US over Europe just now?
Yeah, so Europe's currently back at all-time highs. Been very strong. For me, as I said, it's US versus Europe. It's kind of an AI trade versus a defence spending trade. Obviously, defensive stocks in the DAX, in the stocks, are a big part of the overall makeup. And as I said, back at all-time highs. S&P, okay, doesn't perhaps have the tech influence that you say you get on the NASDAQ. But for me, I can see AI over the next 3 to 6 months being the major driver. So all it takes is if we can get any sort of progress on these tariff talks, and I think only today Trump was on the phone to the head of Japan. It's not going to take a lot for this bubble to kind of really kick off again.
Oh, dear me. Sounds like I've got to roll some more options then. I'll be over in about 10 minutes.
See you soon.
And then, but on the other side of that argument, there's of course the Federal Reserve, right? You had Waller this month that was dovish, but are they being dovish for a reason, for growth concerns, or are they being dovish because they think they've got inflation under control?
Yeah, I don't think they feel that they've got it under control. Definitely not. It's very much still data-driven, a wait-and-see argument. A June cut is now definitely off the table. July, I'd be surprised, to be honest, looking at what the market's implying on the CME and on the Fed funds. Roughly a 70% chance that we don't cut now in July. That's moved quite significantly over the last 2 to 3 weeks. So I don't think we're going to see a cut until September. Past September still slightly murky, bit of a grey area, that one.
Right, let's look at the September chances then. Yeah, 50% chance of a cut there.
Yep.
33% stayed where we are. 15% of 50 basis points lower by that point.
Yeah, 50 would feel heavy-handed. That would come as a big shock. But say you compare that to the December. December's a bit more of a noisy picture.
Right, let's look at December. Because, of course, the real question is jobs, right? Do we start to see the jobs market impacted, right? A jump in unemployment to 4.6, 4.7, that would see the chances that those 50 basis points come down again, wouldn't it?
Definitely, yep. And Lagarde even commented yesterday and said, she came out and said quite a few things, but one was international trade may never be the same again. I can see that. but also she said that the impacts on tariffs on inflation is very hard to gauge still. So it's still going to be a month or two, I think, before we see any effect of these tariffs. And how that's filtered down into the jobs market is absolutely key. So that is the key figure. So for me, non-farms, like I've been at IG for just over 20 years, and I think that non-farms as a figure had a significantly more vote in it. I can remember the good old days, and I'm showing my age here, back, say, the early 2000s, when you would have non-farms come out, cable, euro might move a big figure.
Yeah.
10 minutes after, it's completely reversed, and it's now up a big figure. Now, you don't get those moves.
No.
But for me, in the next, certainly the back end of the summer, I do think these non-farm figures are going to carry a lot more weight, and the CPI, obviously. So
well, that's it, because they could have an impact soon, right? It's more that the unemployment number's been so stable now for so long that you haven't had suddenly a negative print, right? And we all remember those negative prints from 2008.
Yep.
Are we in line for something like that? Because you've had it building for a while. You've had Doge, you've had the tariff problems, you've had companies literally come out and say that they're questioning their next move on employment. So I just wonder if there's a little bit of a surprise one coming, maybe in June, Friday the 6th of June, or as late as July.
Yeah, and I think that's what we are beginning to see in the S&P options. We're beginning to see those downside puts increasingly demanded. Obviously, hedge funds and stuff have to cover their overall exposure. Activity on the put side is the clearest way that can be done. So I think the market's beginning to take a similar sort of view that, okay, we've not had this shock for many, many years now.
Yeah.
Vols come down quite significantly. It might be a good time, to just cover ourselves a little bit. So I think that's been a key driver that we've seen over the last, say, 2 to 3 weeks.
Now, Arthur Fox-Haig in the chat asking, we've actually talked this morning, we've got a few people that have still got Rolls-Royce. What about IG offering options, for example, in Rolls-Royce, being able to do covered calls? How would they go about that with the desk, Elliot?
Yeah, so we do offer UK equity options over the phone, though, only at the moment. So if you have a view on a FTSE 100 stock, chances are that it will have options that trade in there. You can call in. Hopefully, if you've got a PCM, you have a direct relationship with the desk. If not, call in and you can be put through to a trader who can give you a price on that. Okay, so very much available, but over the phone only. In time, we'd like to maybe get those online, but we see a lot more demand on the US side. And on exchange, US equity option volumes will far outweigh anything that you see in UK and wider Europe, to be honest.
And then away from the numbers, just saying, what type of account with IG does he need to access options? He's got a spread betting account.
Yep.
That should be fine, shouldn't it?
That should be fine. Yep. Just as long as it's not a limited risk account. Limited risk account, you can't sell options because obviously selling options, you don't know your worst case. Okay. But every other account type should be fine.
Great. And they find that in the left-hand side of the platform under OPT.
Options are down the bottom, exactly.
Yeah. Good. Right. Now, Bitcoin. It's been a strong week, hasn't it?
It's been a strong week. It's been a lovely week to launch daily options. So quite good timing. I'm a Tottenham fan, so I actually commented to the boys on the desk that in a year when Tottenham can lift a trophy, it's all about timing. So these have been very popular this week. It's been really good. So launched these to the UK clients on Monday, professional clients only. Most of you would have seen a blue box just notifying clients that these are now available. And as you're highlighting there, just a new tag. I'm working on actually getting those in a better place. They currently sit under FX just because of a.
I was about to ask that.
Exactly, yeah. They will have their own crypto classification, but I've just got some work to do in the back end. So they will be easier to find. Hopefully that new tag, it draws your eye, should hopefully be easier to find now. But if you've got a short-term view on Bitcoin, these are a fantastic way to trade.
And so just walk me through how much I could take in for selling at the money straddle then.
Yep, 1 second, let me just get it up.
So yeah, let's talk
these,
111.
Yeah, so these settle at 8 p.m. tonight, and we start to offer those from 9 p.m. So they're offered 23.5. Not pricing over the weekend currently. My expectation is that we will in time. Currently only offering a daily expiry. I'm working on weeklies, monthlies, and hopefully quarterlies as well. So watch this space
Brilliant.
in that regard. Yeah, it'll be really good.
Fantastic.
But in terms of the daily, you're looking at what best part of 1,100 points for selling the straddle. That's it. This time we've got just 11 hours worth of time value. Overnight, you're probably receiving close to 2,000 points. I think it was about 1850 at straddle last night.
What time do you put them on at?
9 p.m.
Right. Okay. Wow. The fun never stops.
Exactly. So you're looking at not far off a 2% move that's priced in each day. Obviously, this week we've seen moves of 3 or 4%.
Yeah.
Yeah. So the vol's richer than it was. At the moment, the skew's significantly onto the top side, but that skew will shift as you kind of get momentum, if you like. So it's been, lovely timing. Yeah. Lots of interest.
Well done. A lot of hard work from you there on the S&P 500, but also on those dailies. So yeah, good man, Elliot.
Doing our best.
Now I've just had a message through from Scotty Byrne there, who's in next week. We're getting a bit of a move in the S&P futures. Not huge, but they have come off their lows at 58.31, and that's because Goldman have said that the Ministry of Finance in Japan would consider a reduction in the issuance amount for 30-year and 40-year JGBs, or even buyback off-the-run bonds. And that's what we're seeing there. That's on Zero Hedge. So yeah, thank you for Scotty for sending that through. And that's, maybe just the start of things that we're seeing that, the options that these central banks are looking at to take the pressure off this bond market.
Yep.
Good. Elliot, have a fantastic weekend. You off racing or anything?
No, I've got my tennis semi-final on Sunday, so that's a big match. But I broke my tooth on Wednesday, which is causing me much pain. I'm
Mate, you've been in the wars.
Not as much as you, but I'm getting there.
Fair. Good stuff.
We're getting old, son.
Yeah, we're getting there. Young at heart. Elliot, thanks so much for joining me. It's great to be back chatting to you on Fridays. Look forward to next week. And after the break, we've got Simon Popple, who is our gold expert, coming in. Angeline's going to run him through all the stories and his feelings around gold at the moment. And that's me done for the day. I shall see you Monday. Angeline, off on holiday again. Actually, no, Monday I think I'll have a day off. So I'll be enjoying the bank holiday. I'll see you Tuesday next week. Have a fantastic weekend. We'll see you then.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Welcome back to Trade Live with IG. I am here with the one, the only Simon Popple, Director of the Gold Program. Thank you so much for joining us finally. Loads of our trader friends here trade gold, as you know. Also, they have tons of questions because, you know, we've seen so much volatility in this space recently. Before we get to the price, just give us a quick snapshot of what you do.
Well, there's really two things I do. The first is I help people convert cash to gold. Back in the day, a lot of people used to just go to cash, but with inflation rising, that's eating into their cash. Gold has delivered an annual average return of about 10.9% in sterling since 2000, so almost 25 years. And so I think a lot of people are looking at converting some cash into gold. And I also help people build portfolios of gold stocks. So, you know, I've worked in gold for many years, and it's kind of what I love doing.
Nice, nice. So let's take a look at gold right now, because we have seen prices absolutely soar. This is the daily chart, trader friends. As you can see there, I have marked the high seen mid-April. We are now cutting through that area of interest there. Those of you that look at you know, gold from a technical viewpoint plus fundamentals like me, you'll hear me say, you heard me say earlier this week that we are now breaching that area of interest, and if we fully come out of this area of interest, then the break above this could lead to a gain of $3,368 an ounce, and then above that towards that all-important psychological 3,500 figure. Your views, Simon, I'd love to hear this, because I am bullish at the moment, at least for the next week or so, but you've got your finger on the pulse.
Yeah, I think it's a really exciting time to be looking at gold. And even though the price on the one hand looks high, if you look at it historically, as you know, what happened in the bull market of the late 70s, early 80s, look at how much money's been printed, the M3 money supply. and there's a very good publication called In Gold We Trust, where they did some forecasts back in 2000, which were pretty accurate. And they've put out a report last week. The chart's on my website, but it's astounding where they think gold can go. So even though gold looks like it's going through the roof, and it certainly is, my belief is it could go significantly higher than where we are today.
I mean, look at this. This is the weekly chart here, but no matter which time period you look at, I mean, it's just one direction. This is the monthly chart here. And around a month ago, we were at a point where fundamentals were thrown out the window. Technicals, they weren't even observing that, all thrown out the window. I guess the question here, Simon, is this, if you had to boil it down to one thing, just one thing, is it all down to uncertainty?
I think that is a massive driver of the gold price. I mean, I use, it's an acronym, MIDI: market uncertainty, interest rates, debt, and inflation.
Here we go, trader friends. I love an acronym here.
But basically,
give it to us again, a bit slower. MIDI.
MIDI.
Yeah.
Market uncertainty is the M. I is inflation, or D is debt, and the other I is interest rates. And market uncertainty, it's driven by loads of different things.
Yeah. So let's go through them. So market uncertainty is up, and then you talked about
inflation
up,
debt. And interest rates, even though they're forecast to go down, but with the inflation recently being announced, I think a lot of people are pausing on further cuts in interest rates. But the belief is that interest rates will go down. So if you look at, you basically got, if you give 1 to each one, you've got 1, 1, 1. You've got 4-0 to gold. So that's probably why it's doing so well.
Yeah. And I love the fact that you talk about, inflation and how to read this very simply, because there's a lot of noise, isn't there, Simon? There's a lot of noise out there. We often talk about, everyone asks me, Ange, how do you try and gauge from the option side of things, where the S&P or an index might close, and we use the options ladder to do that by looking at the straddle. You talked about inflation. How does one, looking at gold, take a view on real feel inflation?
I think there's two things you need to look at. From a sort of big picture, I would, obviously you get the inflation number that's pumped out on a regular basis. But if you want to be more scientific about it, I'd look at the spread between a conventional bond and an index-linked bond. Obviously, index-linked is designed to protect you from inflation. And so if you look at what the spread is between a generic bond and an index-linked, that should give you a feel for where inflation's going. But I think, as importantly, you should look at your own personal level of inflation, because inflation is put together by their basket, not your basket. And it might be that your basket is dramatically different to their basket, in which case your inflation number could be dramatically different to whatever they're saying. And you need something that is relevant to you, not relevant to the market. And so I would definitely look at that.
Good morning, Bigger Beers. Where were you this morning? You have patched in quite late today. Have you been starting your bank holiday weekend early? Mango saying buying physical gold works better. I agree too, but then again, I am slightly biased, Simon. I am the granddaughter of a jeweler and goldsmith as well. Monkey Man asking, Ange, is gold now in a downward trend? Well, I think Simon would disagree with you, because you're thinking this is like a just super cycle.
I strongly disagree. Gold is, you look at the price and look at what's happened, I could totally understand why you think it's in a downward trend, but it's going back to that MIDI point, 4-0. I don't see that as forming a downward trend. I think if market uncertainty goes away, inflation goes down, then yeah, perhaps we have a downward trend then. But I can't see debt ever going down, and I think interest rates will go down, but probably for all the wrong reasons. They'll go down because the debt's so high and they've got to service the debt. And if if interest rates do go down for the wrong reason, then what you'll have is massive inflation. So I think gold has got some very good days ahead.
Simon, I can be devil's advocate for our trader friends now, because, you know, many of them, like Bigger Beers, Monkey Man, and Andrew McKelvey, are very brave, but I'm also speaking out for some of the more shy ones. Please hit like and subscribe if Ange is doing all the questions for you. Thank you for sending them through on ask@ig.com as well. We're here to serve our clients. I guess the devil's advocate question is that, you know, what kind of red flags are you looking out for that might change your MIDI, you know, 4 points?
Well, I think if the debt comes down, if there's a comprehensive policy that is bought into internationally that brings the debt down, I think that would be a big red flag. Again, the market uncertainty, the tariffs and everything like that has caused a lot of market uncertainty. If there was a massive clarification and just going back to the gold price, it's very US driven. Your listeners should be aware of that. Interest rates got cut last week in the UK. Gold price didn't really do anything. If anything happens in the US, gold price does a lot. So if the China and US relations improve dramatically, I'd see that as a red flag for the gold price. But there's no signs of that happening. So I think for now, you know, I'm a bull.
We're also going to, you know, poke some, or actually sprinkle a bit of reality. This is a reality check section for gold as well. JP Morgan saying that they think gold prices will hit $4,000 an ounce by Q2 of 2026. Do you think we're going to get to 4,000 by this time, like JP Morgan is expecting, the analysts rather?
I don't like giving forecasts, but I can't see any reason why it won't go up. How much it goes up is very difficult to know, but it's interesting that someone like JP Morgan, I know Goldman Sachs have also increased their estimate for the gold price, but you've got two massive organisations saying that gold's going to go up. So I think that's, I view that as pretty bullish.
Arthur Fox-Haig, another one of our very, very astute trader friends here, saying Mango, gold sovereigns and Britannia coins better than bullion bars, cost no capital gains tax. Same with silver coins, but you have to pay VAT. This dovetails really nicely to my next question as to, you know, the different ways of getting into gold, right? Like I knew someone from huge, big HSBC, ex-HSBC now, fund manager. He used to, every time a girl that he was dating, it didn't work out, he'd buy a Krugerrand.
Hopefully he doesn't have too many Krugerrands.
Yeah. Each time I go, oh, how's it going? And then I bought another Cougarand. I was like, oh, okay. But yeah, talk us through the different ways, because, you know, like I like spot gold, but this might not be, you know, suited to others. You know, I know a lot of people go through gold ETFs. Andrew McKelvey there saying that he likes Greatland Gold. Let's put that up for him. Talk us through some of the different ways of getting into gold.
Well, as Arthur says, you know, you can get gold sovereigns and Britannias, which are, I don't think you pay any CGT on them at the moment. They're fantastic. What I would say about those is you'll probably pay a premium for them. And so if you're going to buy those, you want to buy them for a longer term, because you don't want to be paying 5% premium and then sell them the next week. But if you're buying stuff for the longer term, they can be fantastic. You could also buy bullion. You know, a lot of people do that for their pension. You can buy, it has to be a certain purity, but you can buy bullion for your pension. So that could be a very attractive way of having some gold in your pension for a longer term. And I think one of the beauties of that is, one of the main criticisms of physical gold is you don't get an income. In your pension, you don't really want an income until you retire. So that could be very attractive. Moving away from physical gold, you could get obviously ETFs. The only issue I have with ETFs is you've got all the counterparty risk of the banks. And if you're buying gold, a lot depends on why you're buying it, but if you're buying it to protect yourself from some sort of Armageddon, then you don't really want to be buying sort of ETFs, because they're probably, in large cases, driven by derivatives and probably exactly the kind of things you're trying to move away from. But then you've got companies, and I think companies can be phenomenally exciting. They're much, much higher risk, but you can get some real diversification by investing in lots of different companies. And I'd say one of the beauties of companies as well is not only do you get diversification from different companies, but very few are pure gold producers. You know, so you probably find some are producing a lot of silver as well, or copper, or zinc. You tend to find uranium, and other companies are sort of that they're more focused on uranium, but
copper and gold generally. There's an I don't know whether you've come across it before, Simon, but there is a Chinese saying that if you find copper, you're likely to find gold.
It's more with silver, funnily enough. But quite often you get gold and silver, and therefore you get copper. But yeah, it's going back to the silver price. If you find the copper price is doing well, which it is at the moment, then that is.
I should have hung on to my Antofagasta.
You should, yeah, but that's actually.
So when copper does well, then.
Well, when copper does well, silver, it means they produce more silver. So if the supply of silver goes up, and you may, depending on where the balance between supply and demand, you may find that the silver price doesn't do as well as you hoped. And I think if you look at what's happening at the moment, the gold price is going through the roof. The silver price has been relatively flat. The copper price has been shooting up. And I think that's maybe one reason why the silver price hasn't taken off. But if you see the copper price crash, there's a good chance you'll see the silver price rise.
That's fantastic insight there. Talking about that, Arsik Sena asking ETF investing in physical gold, is it riskier? So Arsik Sena, one of our very loyal trader friends here. Phil, sorry, you said something in my ear? Okay, so we've got time for one last comment. Mango saying, I buy gold coins and art. Gold prices go up. Just one last one. You talked about miners. Andrew McKilvey saying Greatland Gold, he's got this on his portfolio, on his books, up 3.4%. You bullish or bearish on Greatland Gold? And I think we talked about, bearing in mind the cost of production of gold as well.
Yeah, I mean, I don't know a huge amount about it, but one thing I'd say to him is look at their the cost of production, not just for Greatland Gold, with any company, because I think that that sets a floor for the gold price. Because if the price goes below the all-in sustainable costs of a lot of good companies such as Greatland Gold, then it's unlikely that the gold price will go below that. Right,
gotcha. And just remind us again, it was what was it?
It was, according to the World Gold Council, it was about $1,200 an ounce last year, but I think that will have gone up a lot.
Yeah, because of inflation, exactly. Labour, right? So that was last year.
So yeah, so when companies announce their results, they will definitely publish their all-in sustainable costs, and they'll also cover their projections for all-in sustainable costs for the next financial year. So you want to look at those, because that will give you a bit of comfort as to how low you'd hope the gold price will go.
Right, thank you very much. Away from numbers, I will email you on that. I saw your question, and also Arsax, I've sent you an email on the stock you asked me about yesterday. This is all the time we have for, but I'd love for you to come back to talk about individual gold mining stocks, or individual stocks, or even if you want to talk about gold ETFs, people, put your requests in here right now if you want Simon to do something specific for you the next time he comes back. But thank you so much for traveling all this way.
It was great to be here.
It was great to see you. Right, stay with us, because we are going to give you a highlight of what to look out for next week, how to trade it, and also number of the week with myself and Chris Beecham. There will be a prize, so stay and try and guess the number of the week.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back. It is number of the week, or sometimes called number of the beast here. Make sure you got your fingers on the buzzer, i.e. on the chat, to put in your answer, because Chris Beecham has a number for me. I have no idea what this number is, and if you can guess it before I can, you get a prize like Jesse 14 last Friday. Right. Hit me with it, Chris.
The number of the week is 5%. So there's your number to conjure with for the last few days. It's
the amount that egg prices have come down by in the US.
No, I think it's more than that, isn't it, for eggs?
It is more, yeah, you're right, it is more. Given that eggs was mentioned in the run-up to the presidential elections, you did...
Yes, they're much cheaper in Ukraine, apparently. Even the Ukrainians were saying they could send eggs to the US as a way of keeping them happy.
Yes. Is this something to do with bonds?
It is, unfortunately, yeah. Sorry to bring the week down on that.
Oh, my goodness.
Raoul, but it is.
Raoul, if you're still on the chat, get me that whiskey. Oh, I can't see. Is Jesse guessing? Oh, no. Are you, Andrew McKilvey, coming up with the different... can you read it out, Phil? I know some people in the chat. I think it's to do with 30. Is it 30 year?
Yeah, it is. Yeah.
So did someone beat me to it?
Make sure you pick the right person for that.
Who beat me to it? Jesse. Is it Jesse 14 or another Jesse? Oh, wow. Jesse 14, you get 2 gifts coming away. So make sure you get that address sent to me right now. Did she beat Andrew McKilvey? Because I know Andrew. Someone said Andrew. I can get the chat up now. Bigger. Andrew McKilvey said UK retail sales was Where's that button, Phil?
No. retail sales. Don't be fussed about that.
Yeah. Okay.
Sorry.
So yeah, we just had Joachim Clement here from Panmure Liberum. That name of the company keeps getting longer.
It does, doesn't it?
It does. And he was saying that it does feel a bit like a Liz Truss moment.
Well, it sort of does, but it isn't, is it? Because we're dealing with an economy that's far larger, it's far more important, and of course it's the go-to place for liquidity. So it is and it isn't, I think it has to be said. The problem is we like to see patterns, we like to see things recurring again and again, and obviously there were some parallels there, the sense that there weren't any adults in charge of the US government. It certainly caused jitters. And with the budget bill obviously still yet to fully make its way through, it goes to the Senate now and they're going to probably tear it to pieces anyway. There's a sense of confidence in the US has been lost. I think it was Daria Perkins at Lombard who used for the UK was called the moron risk premium, was being eaten away. And we've not quite seen that same thing in the US, but enough to give people jitters. It's a totemic level, it's a psychologically important level, 5%. It's going to have an impact across a host of sectors, the economy, although interestingly enough, not so much for the US mortgage market because so many people are on these long mortgages that it's not, unless you're obviously in an unfortunate position having a mortgage now, if you've got it before and you managed to say, pick your moment in the early 2020s when it was so record lows, then it's not too bad. But it is definitely something to worry about. And it's just another sign of those jitters. It's not as if stock market is particularly bothered by it. They are a little bit down this week, but not massively. But it's certainly something to continue to rumble away in the background.
Yeah, you're totally right, Chris. When I was in Chicago last summer, there was even talk of like mortgages out in the US where, you can pass it to the next generation. I don't know whether that was actually confirmed or not, but, just whacking up the chart here so everyone's got a snapshot of where yields are at the moment. As you can see there, producer Phil is trying to get me to use the F shortcut, F and F11, but pressing my keys without looking at my keyboard makes me very, very nervous. So that's why I use my cursor. Anyone know of a shorter shortcut, please let me know. But that is saying in my ear, that's a shortcut, and that yield here, you can see there, the 30 years where we are seeing, that real kind of like flag there. But, the short-term boost in growth, I was talking to Joachim about this, no one reached for their whiskey just yet. There are positively, some positive effects in the short term, right? The rise in government spending or tax cuts could potentially, Chris, boost consumer demand, investment. But of course, there are risks, as Chris mentioned earlier, that the economy could overheat in an already tight labor market and push inflation up further. Right, stay listening because we are going to now go to week ahead with myself and Chris. And we'll be right back after this, so don't go. It's a very, very short break. We'll tell you what key events to get your trades in ahead. Make sure you're all kind of like sized up, ready to go for next week. Hey, welcome back. And this is the week ahead with myself and Chris Beecham. Let's start with the corporate news because the elephant in the room is, of course, NVIDIA.
Yep, it is the final important one of earnings season. It's always the way that earnings season drops off a cliff in terms of importance, really, and the mega caps are reported. And then you get NVIDIA. You get the arguably, is it still the most important company in the world? Maybe. Certainly uniquely exposed to the US-China spat. So it is always crucial for NVIDIA. They haven't missed forecasts in a year, actually. So they've not done too bad, really, if you think about it. In terms of earnings estimates, obviously the shares have been on something of a journey over the past 12 months, to say the least. It
is incredible, isn't it? This is the 12-month chart here, almost as if I knew what Chris was going to say. We did not compare notes before this. FN, F11, I'm being told.
No, perish the thought.
Yes.
But then if you look at the monthly chart for NVIDIA, look at it almost like it's a consolidation. It's been a heck of a volatile 12 months. the shares bouncing around and not really going anywhere. But then, of course, look where they were in 2022-23.
Yes.
So it goes up 7-fold in about a year and a half. It is bound to do this. You see this in share prices and in asset prices across the globe. To consolidate, maybe this is, I know it might not be the most popular opinion in the world right now, but maybe this is the consolidation before the next move high. Maybe the last, what was it? I suppose it was really June of last year. So it is a year of sideways price movement. It's just enough to cause that consolidation before it moves on again. This perhaps is the thing that nobody, except the most devoted of NVIDIA shareholders, bless them, is expecting. Everyone's thinking, oh, it must go down from here. Maybe if there's a recession, that would be the obvious case. But if there isn't a recession, if NVIDIA consolidates, if this earnings marks a change in tone, or next time's earnings, we'll come to that in a second, really, about data. But yeah, NVIDIA, the key one of the week.
I'm
really with Kingfisher in the UK, another one.
Yeah, I'm really surprised that the guys in the studio, as you're talking about, you know, a consolidation NVIDIA, perhaps this might be, you know, when it starts turning low. I'm surprised they didn't put Axel's "The Trend Is Your Friend," hit that button. But as you can see, yeah, there we are. It is still, you know, upward momentum. And actually, you know, Jensen Huang was on that trip with Trump recently, right? You know, he went, did he go on the same jet? Not sure how he traveled with Trump, but, you know, he was important enough to kind of, you know, be on that last trip when they had the chat with the Chinese, I believe. He's also, for those of you that trade NVIDIA, just showing you the monthly chart now, because, you know, to show you that what Chris was talking about earlier, and yes, it has had those huge gains, and perhaps we're seeing a period of consolidation here.
Why would you want to short that?
Whether it makes another leg up, I am looking for continued highs ahead, and after, of course, the outlook from that earnings report. Those of you who listen in the presser, or rather Jensen Huang's 2 to 3 hour, yes, it is that long, because I have listened to the, yes. Make sure you're cooking dinner, and sometimes you're still eating dinner and he's still talking. This man has got real speaking power. He can talk for a long time. But taking a look at the shares, you know, from a technical viewpoint, this is still in a strong uptrend there, right? And watch out for what he says about teraflops, and also this DGX Sparks, which is a compact desktop supercomputer, which is designed for both your home and professional environments, but specifically home. It might sound expensive. 10K was the last figure that was mentioned, but it really does then bring AI into your home. I can see Chris cringing there, the thought of AI in his home. And Mango saying NVIDIA overrated. Boston Frank saying bigger beers. I made good money on NVIDIA until July 2024. I took half off, as you know, October last year. AMD stock in comparison from an SP perspective. Mango says my lifespan is about 5 years left. My goodness, what does that mean? So let's take a look at Kingfisher. Right, here we are.
From the most exciting company in the world to not quite the most exciting company in the world.
It is exciting. It owns B&Q. Well, that's exciting for me.
Maybe so. It's a slightly slim pickings, because this week was full of UK corporate data to the point where it was getting ridiculous yesterday morning. There was so many companies reporting. I don't know how you really... There should be a limited number. It's one of my personal bugbears. But anyway, Kingfisher is probably the only one on the list next week that really captures people's attention in any major way. It's not even a big heavyweight stock, but it's good for the news flow as well. It's relatively popular among clients. So that's the only one to keep an eye out for particularly. It had an absolute shocker, of course, in March. Shares were down 12%, weak outlook there. It'd be interesting to see whether there's any sign of a bit of a recovery, but it was certainly a grim set of numbers, and inventory was down as well. So it wasn't a very encouraging set of numbers from Kingfisher.
And as far as I'm concerned, ImHope, in my humble opinion, as Andrew McKelvey likes to use, Kingfisher is very much tied to the UK property market, and as long as the UK property market doesn't show much sign of springing to life, then this is going to be a stock I feel that is under pressure. I look at this in tandem with a lot of the property stocks here in the UK. So many people have cleverly pointed out, and I've then explained that there is a reason for all the likes of Kingfisher being in the same space. I'm going to zoom that in for you. Oh, Phil didn't say in my ear that my zooming skills aren't good enough. That's interesting. He's probably not listening or ignoring me. Oh, he's always listening. And so I've put there for you, you know, just looking at that because, you know, the Barrett Red Rose, Taylor Wimpey, the Bellways, you know, they're all still under pressure as well. Crest Nicholson, Persimmon as well. As long as we don't see the UK property market springing to life, they might do if we get like 2 more interest rate cuts. Is that still the expectation, Beachy Head?
I think it's seen slight winding in following that inflation reading this week, which is a real spike.
I know, it was hotter than expected, wasn't it?
It was. And you had the chief economist as well the day before saying that he thought the pace of rate cuts had gone too fast. So he now looks very clever. And it certainly does complicate matters. Very much so for the BOE. So.
Macro, that takes us nicely to macro. Producer Phil, whack up the macro chart there. So the week ahead, we've got Beachy Head, your favourite, core PCE.
Yes, everybody's the train spotters equivalent of economic data, really, because as anyone who loves the PC will tell you, it's the Fed's preferred measure. We were discussing with somebody yesterday saying, well, why does nobody care about the PC? And the simple answer is it comes later in the month. We've had the excitement with CPI. Nobody really cares. If it was more important, the other view is that they wouldn't release it on a Friday. I think they'd release it at a different time of the week because it would carry more weight. But yeah, core PCE, it's just not the number that consumers see in the shops. They will be looking at the headline. For core PCE is the Fed saying we strip out food and energy, those volatile costs, to get a more sustainable, stable number.
I think that GDP print is going to be more market moving.
Because it's the second estimate, isn't it? It's the second estimate, so we get a bit more data to go with it. But no change. I don't think any change was actually expected to the 0.3 estimate from last time around, nonetheless. But still, perhaps more important.
Also, I guess the sideline thing with the 2 data points from the US, Chris, will be that it'll, you know, give us some insight into sort of how it might influence expectations for future Fed policy. They're still using that. We're still waiting for data, right? We're still awaiting data. And that, to my mind, just means one thing: further weakness for the dollar. We've seen the dollar currently down 0.5%. They must have heard you, Chris. It's dropped a bit lower. Also on the weekly, let's have a look at the weekly. It is down some 1.5% there. Taking a look at the hourly chart as well to see whether I had a trade on earlier this week to see whether it is still below, and it is still below those moving averages there. So yeah, I think the 2 figures will show further weakness for the US dollar going ahead. And let's whack up the other few indicators. We've also got vehicle sales, credit indicators. I think this is from China.
Yes. There's some data to it's, but I think the most important thing is that next week is the last week where is sort of the data from really before tariffs. You get May consumer confidence in the US, you get durable goods from April, but it's still too early to really give a proper read. I suppose consumer confidence might actually be the key one to watch for the US in some ways next week. But once we get into June the 11th is inflation for May in the US, and then things start to become more interesting. And that's when I think you've got to see how markets react, because they continue to happily rally in the quiet lull before the data kicks in. So it is going to get probably more exciting, I suspect, from here on in.
Loads of people on the chat. We've got Mango talking about from my few decades info about copyright. Is that to do with your very strange comment earlier about my life spawn is about 5 years left? Please let me know what you meant by that. AMD in my portfolio. Jesse14 also chiming in, saying "Who Let the Dogs Out" is a song when discussing my shareholdings. Arthur Fox Haig saying gallery is missing a Queen sound button for markets under pressure. Wow, it is under pressure. Chris Beecham is very much a classical music sort of person, so sometimes we do this just to trigger him, to try and trigger him on air. So do send in all your comments. We'll get them. Like and subscribe. People, thank you for getting us to 750. How many are we at now, Phil? 755. Terrence, thank you very much. Who let the dogs out? We're going to let Chris out right now so he can start his bank holiday weekend. Right, Chris?
Thank you. Bye.
Have a good Friday, everyone, and see you the following week, because I'm going to be in Milan next week.